Welcome to the deep dive. Today we're strapping in, so to speak, to explore ACHR Aviation. Ticker is ACHR. That's ACHR. They're really making waves in the electric vertical takeoff and landing space. You know, eVTOLs.
Yeah, a lot of buzz around them.
Totally. We've got an analysis here from The Motley Fool. It just came out yesterday, April 27th, 2025. And we've got stock prices basically right up to now, April 28th.
Okay.
So the big question we want to tackle for you today is, ACHR's stock is sitting below $10 right now. Does that make it a buy?
That is the question.
Our mission here is really to, dig into ACHR's story, the potential, which looks exciting, but also the risks, which are definitely there if you're thinking about putting money in.
Okay, yeah, let's unpack it. ACHR certainly has some interesting things going on that are getting attention. The Fool piece, it rightly focuses on their air taxi plans.
Right.
And what's really interesting is this partnership they've got with Abu Dhabi. They're the first launch customer.
Abu Dhabi.
Now, this isn't just about, one city getting these things first. The idea, as the article puts it, is to create a playbook.
A playbook?
Yeah, a model they can hopefully use to roll this out elsewhere later on.
Mm-hmm.
It suggests a scalable approach maybe helps them not be totally reliant on just the U.S. market early doors.
Exactly. And it's not just international focus, is it? They're also looking at something potentially huge right here in the U.S. with United Airlines.
Mm-hmm. The United Partnership.
Yeah. The idea of flying people between, Manhattan and the airports around New York. The article mentions a potential market size of $80 billion by 2033.
Wow.
That's a massive number. What's really behind that? What are the assumptions driving that kind of growth? Is it just speed or...
That's a really good question. It's not just about saving time, although that's, a huge draw in cities like New York.
Sure.
But it also depends heavily on getting the infrastructure built.
Yeah.
You need places to land, places to charge.
Vertiports and things.
Exactly. And crucially, you need the public to accept it, and you need regulators to sign off. It's a bit like how ride-sharing took a while to catch on, right?
Yeah.
So connecting that back to ACHR, landing that United Partnership is a really big validation. It shows a major airline sees the potential here.
Okay, so they're exploring how these eVTOLs fit into the future. Makes sense. And it's not only commercial stuff either. ACHR's also got something going on with the U.S. Department of Defense developing eVTOLs for them.
That's right. There's a deal potentially worth up to $148 million.
Wow, nearly $150 million. That's a serious chunk of change, especially for a company that isn't actually selling anything yet.
It really is.
Oh, what does that government interest, that potential funding, really mean for ACHR's, long-term health?
Well, that defense contract, it brings a few key things. First, just the money itself, obviously.
Yeah.
But beyond that, it's credibility.
Oh, okay.
The DoD has tough standards, so their interest suggests ACHR's tech is, promising. It's validation. Second, it could lead to more tech development. Maybe things they learn can help their commercial side too.
Like cross-pollination?
Kinda, yeah. And third, looking way down the road, it helps diversify where their money might come from. So they're not betting everything on the air taxi service working out perfectly.
Okay, so they're definitely making moves, building credibility, exploring different avenues. But like we know, getting from cool tech to actual widespread use is, it's a long road.
It's a marathon, absolutely.
And the Motley Fool analysis, it also points out some pretty big reasons to be cautious here. The first one that really jumps out is tariffs.
And tariffs.
Specifically, the article mentions those tariffs President Trump brought in and how they could seriously inflate the cost of parts for their aircraft the midnight.
Absolutely. And the article gives a specific example. ACHR gets batteries from a supplier in Taiwan. Right now, those face a 10% tariff coming into the U.S.
10% just on the batteries.
Just on the batteries. And then you zoom out, and some estimates say these kinds of tariffs could add something like $8 billion in costs overall for car makers and battery producers in the U.S.
$8 billion.
That's the estimate mentioned. And since ACHR's plane is electric, heavily relies on batteries, well, they're going to feel that pinch.
Okay, so this 10% tariff on the batteries, how directly does that hit the cost of building one midnight aircraft? Is it like cost goes up 10%, or is it more complicated?
It's usually not quite that simple. They might have existing contracts. Maybe they can absorb some costs, maybe pass them on. But it definitely adds pressure to their bottom line.
Right.
And the worry isn't just the current tariffs. The article sort of flags the possibility that tariffs could get slapped on other key parts too, like semiconductors.
Ah, the chips. They use a lot of those, I imagine.
Definitely. Right now they're exempt, apparently, but the analysis suggests that could change. If those get hit with tariffs, that would squeeze their margins even more.
And it's not just about the direct cost increase for Archer, is it? The analysis links these potential tariffs to the bigger economic picture, like the risk of a slowdown.
Exactly. There's a connection.
How does that work? How could tariffs on, say, batteries and chips ripple out and mess with Archer's big plans?
Well, it's kind of a few things. One, higher costs for companies can mean higher prices for everyone else, which can cool down the whole economy, less spending overall.
Mm-hmm.
Two, tariffs often lead to other countries hitting back with their own tariffs, right? So you get trade disputes, more uncertainty, just generally not great for business.
Right. Instability.
Yeah. And for Archer specifically, if the economy slows down, people might cut back on non-essential spending. Maybe fewer people are eager to try an air taxi.
Oh.
And it could also make it tougher for partners like United to commit fully to those big orders if their own finances start looking shaky.
That makes a lot of sense. It's all interconnected. Now, the Fool piece also points out something pretty striking. Archer's stock price. It shot up 110% over the past year.
Yeah, quite a run.
Even though, as we said, they haven't actually sold any aircraft yet, no revenue, doesn't that mean there's a ton of optimism already baked into that price?
Oh, absolutely. That's a classic situation for these kinds of future-focused companies.
And does that make the stock extra vulnerable if there's bad news, like tariffs hitting harder or the economy sputtering?
For sure. When a stock runs up purely on potential, not on actual earnings, it can be much more volatile. Any hint of delays, cost overruns from tariffs, a weaker economy, investors might suddenly rethink how rosy that future looks, and you can see the price drop pretty sharply. It's like a balloon filled with hope, easy to pop.
Right. And Archer isn't just planning a slow, steady production increase either. They've got really ambitious goals, don't they?
Very ambitious.
Something like 2 aircraft per month by the end of this year, 2025, and then jumping to 650 planes a year by 2030.
Yeah, that's a huge ramp up.
So how do these tariff issues and the risk of an economic slump potentially throw a wrench in those plans?
Well, scaling production that fast is already incredibly complex. You need supply chains to work perfectly, manufacturing humming along, quality control.
Yeah, it sounds hard enough without problems.
Yeah, okay. So now you throw in potentially much higher costs because of tariffs. That strains their cash.
Yeah.
It could easily cause delays.
Okay.
And if the economy does slow down, it might be harder for them to raise the money they need for that massive expansion.
Yep.
And again, demand for the planes themselves might soften. It's like trying to build this incredibly complex machine while someone keeps cutting your budget and parts are getting more expensive.
Okay. So putting it all together, it really sounds like the Motley Fool's take is maybe pump the brakes a bit, be cautious.
That seems to be the gist of it, yeah. The uncertainty around tariffs and what that might mean for the wider economy, it just adds a big layer of risk right now. The article basically suggests waiting, seeing how these things play out before jumping in. Hit pause, essentially.
Okay, let's quickly touch on where the stock is right now. As we said, ticker is ACHR, trades on the New York Stock Exchange.
NYSE, yep.
Company's total value, the market cap, is hovering around $5 billion.
$5 billion. Still pretty substantial for a pre-revenue company.
It is. Now, looking at just today's trading around midday Eastern time, the stock's down about 3.78%. That's roughly $0.33 a share lower.
Okay, bit of a down day.
Yeah, and I guess for a stock like this, in a sector this new, a swing of almost 4% in a day, it's maybe not shocking, but it does underline that volatility risk we talked about.
Absolutely. It comes with the territory in these emerging tech plays.
And that brings the actual price, as we checked, to $8.27 per share.
$8.27, so below that $10 mark.
Right. But it's also worth remembering the stock is actually down about 14% since the start of this year. Year to date, it's lost ground.
So yeah, while it's under $10 now, it hasn't exactly been a smooth slide down either. Volatile is the word.
Okay, so let's bring it all back for you, the listener. The big question we started with. Based on this analysis from the Motley Fool, is Archer Aviation, ACHR, a buy while it's under $10?
Well, the analysis definitely highlights the potential.
It's significant.
You've got these partnerships like Abu Dhabi showing international interest. You've got the potential DoD contracts adding credibility. And they were making progress, building the actual Midnight aircraft. Those conditional orders, especially from United, show there's real market interest there.
Right. But then there's the other side of the coin. The analysis flags some serious risks. Top of the list seems to be this tariff uncertainty.
Definitely. Tariffs and the potential for a wider economic slowdown seem like the biggest clouds right now.
And just the basic fact that Archer is still super early stage, no revenue yet.
Zero revenue. And those conditional purchase agreements, you mentioned United, they're important, but they're not guaranteed sales yet, are they?
Yeah.
There are conditions attached.
Good point. What kind of conditions usually?
Oh, typically things like Archer hitting certain performance milestones with the aircraft, getting all the necessary regulatory approvals. FAA certification is a huge one.
Right, the FAA.
And it also depends on the buyer, like United still wanting the planes when the time comes, you know?
Yeah.
Their own finances and strategy have to align.
Yeah.
So strong signals, yes. Guaranteed money in the bank.
Not yet. Not yet. So maybe the final thought for you to chew on is this. Deciding on Archer right now, it really feels like weighing that really exciting, potentially huge long-term future against some very real, very current uncertainties, especially those economic factors, the tariffs, things that are kind of outside Archer's direct control. It feels like a situation where you probably want to keep a really close eye on how those external things develop.
Yeah, and how Archer manages to navigate them. Seeing how they handle these headwinds over the next year or two will tell you a lot. More data points will definitely help make a more informed decision down the line.
Exactly. More information needed, perhaps. Definitely one to watch.